All right. Welcome, YouTube. Happy Friday. Aaron Yoon here, coming at you from New York City. Today, normally on Fridays, we play the cash flow game, which I might still do if I have enough time after this, but I have a great announcement this week. The best trading app that there is out there that's free just released its new version, and the best just keeps getting better. What app am I talking about? Of course, none other than iFlip Invest. If you've been following me for any period of time, you already know I'm a big fan of this app because it's the only app out there that gives you automated risk management. It'll freaking time the market for you. And the proof is in the pudding, and I'm about to show you exactly how it did for me during the COVID crash and afterwards. So the part of the new release of iFlip 2.0 is that the mobile app interface is also available on the web. So that's what you're seeing on my screen here. I love that I can actually look at this on a big screen instead of a tiny little screen like on my phone. Instead of just looking at it like this. I'm glad that I can look at it on a big screen and have multiple tabs open. This to me is a much more comfortable way to look at things. So I thank them for that. So as I'm doing this review video, I'm gonna use the desktop web platform version, but understand that everything that I show you here is also 100% viewable and available in the mobile version as well. So if you want to follow along on the mobile version, feel free to do it. On the home screen, what we have here, I'm just going to start off on the home screen here. Today is September 11th, kind of a little bit of an ironic day to be doing this kind of a video, but all thoughts go out in remembrance for everyone and anyone who was affected by the tragedy on September 11th. Moving forward with this video, though, with this review video, the market's been kind of weird this past week. It's been in a little bit of a correction mode, so you are going to see a lot of red. But that's not the app's fault or anything like that. Just keep in mind when this video is being recorded, it's September 11th. The market has been going through a correction this week and a little bit last week as well. So that's why you're going to see a lot of red. So don't panic. Keep an eye on the big picture. So overall, I'm going to start off with the first thing I'm going to do is let's take a look at the banking feature. There are two ways to fund your iFlip account. You can do an ACH transfer, which is typical, bank-to-bank transfer. You can see that I have my Chase account transferred here, or you can actually wire money, and I believe this is going to be actually instant. But what you need to do is you need to initiate a transfer from your bank. So what you can do is this is the information. You can save it and download it as an image. If I click save, it downloads it as an image, as you can see there. Okay, it's asking me to download multiple files. I'm not going to do that. I clicked it twice. So you can save that as an image, and you can send that information to your bank and initiate a wire transfer from your bank. What I am going to do here is I'm not going to do the wire transfer. I'm not in any particular rush, but I am going to transfer to iFlip another $1,000 from my bank account, because I am going to, as the days go by, I am going to be reviewing more and more attributes and features of this app, because a lot has changed, and I'll get into that in a moment. So I'm going to click review transfer. I'm going to submit $1,000 from my Chase account to my iFlip account. As you can see here, I'm going to submit. Boom, that's it. Now, it does take several business days for this to transfer. So if you're in a rush, you got to go with the wiring option. you got to go with the wire option and transfer funds immediately. So now let's just go into activity here to confirm that I did initiate a transfer $1,000 from my total checking account to my iFlip account. You can also see here that my trading history. So there has been, I traded some things manually. I did buy a couple of stocks here manually. And I'm also inside of some of these SMARTFOLIOs. Now this is really the bread and butter, and this is the most valuable piece of iFlip. No other app out here does algorithms for you for free. They either make you code your own, which is, who wants to learn how to do that? Who has time to learn how to do that, right? Unless you're already in the business, that's not helpful for you. Or you're required to manually trade on your own, like with Robinhood or Webull or whatever. And the alternative is you have to buy into one of those robo-advisors that have preset portfolios for you, where you can take expert picks and just kind of copy what they do. But the biggest problem with that is there's no risk management. You just have to go up and down with the market. That's silly, if you ask me. If you could go back in time, and exit the market before the COVID crash, would you do it? I don't know a single person who would say, nah, I'd rather crash with the COVID crash because that's the right way to invest. I don't know a single person who would do that. If you had the chance to exit the market before February and get back in the market at the end of March when it was going back up, who wouldn't take that? Well, that's what this app did, and I'm going to show you the proof right now. You might have already seen the proof in the history there, but it's not as easy to read. The way that I'm going to do that is I'm going to click Start Trading. And what we have here is you're going to see all the free algorithmic SMARTFOLIOs. And what they've actually included here is the light algorithmic SMARTFOLIOs, advanced algorithmic SMARTFOLIOs, and pro algorithmic SMARTFOLIOs. What do these mean? These are the paid tiers. Now, I've been in the pro level service as an early adopter in beta since before this app even came out. That's why you see that my current plan is pro. Now, if I wanted to change my tier and downgrade, I can, but I don't know why anybody would ever do that. This is really more for people who want to upgrade. If I want to downgrade, I can, but I'm not ever gonna do that. Okay, so even the free algorithmic SMARTFOLIOs has done amazing this year. So I'm gonna click the SPY Plus because that's the bread and butter. That's the one that you want. I'm going to assume that this is showing one infinity because the market is closed right now. That's what I'm going to assume. Oh, no. Okay. It just needed to load. It just needed to reload. So here's what happened today. Market is not doing so good today and this entire week. But let me show you. Is this my browser? I don't know why this is struggling all of a sudden. My browser has actually been screwing up on my trading platform, on my Forex platform. So give me a moment here. Chrome has not been acting. I couldn't even log into Verizon the other day. I had to use Firefox. My Chrome is being weird. So hopefully this is just me. Okay, that looks better. I just needed to refresh. Okay, so let's take a look at the 1 year profile. Now, mind you, this is a chart that's supposed to show the past 12 months. It is September right now, and this app only was released at the middle or the end of January. So that's why you're not going to see a full 12 months worth of history. This is basically the lifetime of iFlip, because I had it since it was released. Okay, now I put in $1,000 into this SPY Plus portfolio back in January. Understand that in January, this was before the COVID crash happened, before we went into lockdown mode, and before the pandemic hit the US. And if you just look at this at first glance, this is January in the beginning, and this is February, this is the September 11th right now, as you can see right there. Okay? Now, if you look at this closely, where do you see a COVID crash? Let me just put this into perspective for a moment. Whoops. Okay, let's put this into perspective. I just put in the S&P 500 in Google, and I'm going to go to year to date. Right? This is from January 1st, and this is till September 11th. Now, you can clearly, obviously, this giant dip is where we had the COVID crash, and we spent the last, I don't know, 6 months or so recovering from it, and we finally broke even about a couple of weeks ago until this week when we're having another correction. So you can, in this chart, there's obviously a major crash right here. Now, where do you see that in this? The reason you don't see it in this, even though this algorithmic smartfolio trades the S&P 500 and a little bit of the Apple, the reason you don't see it here is because this app was able to time the exit of the COVID crash and then get back in accordingly, right when the market was recovering. And I'll show you how that pans out. The app changed, so I don't know where to look for this anymore. Oh, no, I just click the, all I do is I click SPY, and I look at the history. So, you can see that even though I deposited money in January, it didn't buy the S&P 500 until February 28th. If I bring up this S&P 500 chart again, every other app out there, if you put money in and you deposit it and you put auto purchase on, or whatever index fund or 401k or mutual fund or whatever that you're investing in, if you deposit money on January 20th or something, whichever, January 23rd, when I deposited funds into the Smartfolio, it would buy the spider, the S&P 500, on January 24th without thinking about, is this a good time to buy or is it not a good time to buy? It doesn't think like that. It just automatically buys. And you tell me, was it a smart idea, in hindsight of course, do you think it was a smart idea to buy the S&P 500 here when you were gonna lose about 30% of it in over the next few weeks? I don't think so. Now, it's not like I'm saying this app can predict the future. It's not like I'm saying this app can predict the future. But what it does do is it uses a series of indicators and mathematical formulas to sense that, you know what? It wouldn't take much for the S&P 500 to tumble down. Let's take a look at this. Now this green chart here, I just need to my Chrome browser, it just does not like me today. I can't click anything. Jeez. Okay. What I'm gonna do is, this is very annoying. I'm gonna open this in Firefox because my Chrome does not like me. I'm gonna log in. Okay, let's try this again. So now I'm logged in. So I click Start Trading, and let's take a look at the SPY Plus SMARTFOLIO, which is the bread and butter. If I open up the yearly chart, or the 1-year chart, rolling 12 months, you can see that since January, doesn't look like there was any crash. You can see a little bit of a correction as of last week, but that's after a massive, massive performance for the year. So what I'm going to do now is I'm going to click Spider. Understand that I deposited funds into the SMARTFOLIO, basically giving it the green light to purchase back in January. However, it didn't purchase the S&P 500 until February 28th. Now, let's take a look at this. Entered February 28th. Now, if I'm not mistaken, okay. Let me show you exactly what happened here. February 28th, I'm just going to go back. Okay, so February 28th is here. Now, in retrospect, since hindsight is 2020, was February 28th a good day to buy? Not really. There was still a lot more crashing to be done if you look at the S&P 500 here. So let's move this aside. It recognized its mistake and sold on March 4th. You can see that this says buy right here, and this says sell right here. So let's see what it did. So it bought on February 28th, and on March 4th it said, uh-oh. It actually made money, but it said, uh-oh, I don't feel good about this. There's a lot more crashing to be done, it seems. So it made money. So I do appreciate that, but it wasn't the best time to get in if I was just going to buy and hold, you know? So it sold on March 4th, took some profit, and waited. When did it buy again? March 19th. Okay, you can see that it bought again on March 19th here. Now, March 19th, you can see it's darn close to the bottom. The actual bottom was March 23rd. So it wasn't perfect, but hey, come on. I don't know anyone who would complain about exiting the market here, or rather not even getting in the market at all in January, and knowing to get in the market on March 19th and doing it all on autopilot. I don't know anybody who would complain about that in retrospect. And since then, it's been holding. And since then, it's been on a massive surge. So that's why in this particular portfolio, or that's why in this particular SMARTFolio, you are seeing, nope, this is not it. I have to go back. How do I go back? Click Start Trading. Click SPY Plus. That's why in this particular SMARTFolio, what you're seeing, oh geez. Sorry guys, a little bit of a technical difficulty there. That's why in this particular SMARTFolio, what you're seeing is almost nothing of a crash. In fact, let's just scrub through this really quickly. You can see that it entered the market this isn't gonna be fully accurate because it's also including Apple, so it's not the best representation. But you can see that based on the transaction history, it did a pretty darn good job of timing the market this year, right? And this is something that you could have had in your hands for free. Now, I only put in $1,000 in here because for demo purposes to make videos like this and show you. I have a lot more money in the same type of portfolio, or the same type of SMARTFolio algorithmically timing the market, only I can't show you that here because it doesn't look nearly as nice. It's on the legacy system, but I've been doing this kind of performance on my retirement account as well. If you want retirement accounts, just a quick note, the free app isn't able to integrate that yet. So you do need to reach out to the team, go to iFlipInvest.com and schedule an appointment to set up retirement accounts. That has to still be done on the legacy system. But if you want to just connect your bank account and just start trading cash and investing cash, that's completely free. That is up until $6,000. Now let's take a look at what I mean by that exactly. So when I click Start Trading, you can see that the free algorithmic SMARTFolios are available, the SPY and the SPY Plus. And how much can you trade for free? Up to $6,000. After your account balance hits $6,000, it'll notify you, and maybe I will just put in a $6,000 just to trigger the notification and show you what it looks like. Although no, it wouldn't actually do that for me because I'm already a pro level account, so I wouldn't actually be able to show you that. But once your account balance hits 6,000, you have two options. You can withdraw some money to stay at the free level, or this is what I would recommend, is start paying the $10 a month fee. It's actually not bad if you already have $6,000 invested, right? And then you'll get access to more advanced SMARTFolios. And this is what I'm going to do here for you all today. I'm going to actually take a look at some of these other more advanced SMARTFolios, and I'm going to buy one. So you get to watch me deposit money, and going forward, I'll do videos regularly on how these other SMARTFolios are going to operate. Now, I'll go into the light SMARTFolios first. And I've already done videos on the SPY and red oil. You can just browse my channel and see deep dive SMARTFolio reviews on the SPY and red oil, because those have been out for a while. You can see that I'm already, the orange dot indicates that I'm already trading them. Okay, let's start off with something that most people will recognize, which is the FANG portfolio. Now, the FANG portfolio is insane because it is literally taking all of the most volatile tech stocks there are on in the NASDAQ, pretty much. FANG stands for Facebook, Apple, Amazon, Netflix, and Google. Some people say Microsoft or Tesla should be in there as well these days after this year, but for the most part, prior to 2020, it's definitely just been these 5 stocks: Facebook, Apple, Amazon, Netflix, and Google. And it says in the description here, they are largely responsible for the NASDAQ rise in recent years. I would argue that it's mostly Apple. Apple really moves the NASDAQ the most by itself. If you had to just pay attention to one stock that has the power to move the entire index. But these portfolios consist of high beta. And so for those of you that aren't familiar, high beta means that it moves a lot, okay? The contrary is also true. If the market falls, they will fall more. So it's going to move up a lot, and if the market crashes, it's going to crash more than the index would as well. So it's a leader both to the upside and the downside. Now, over the last 14 years, this portfolio returned over 20% per year. Just because the Smartfolio has a high average yearly return does not mean that it is the best Smartfolio for you. Absolutely, I agree with that. This is all a matter of how much movement can you stomach, because when the market crashes, it's going to crash hard for you. But when the market is doing well, then you're going to feel like a freaking genius, right? So it's how much movement can you tolerate. Okay, it will experience greater volatility, ups and downs, than most of the conservative Smartfolios. You need to ask yourself, are you comfortable with that? Most people will say, like, if I were to go back 15 years, or even just this past 1 year, right? Just because that's easier to remember. Just this past 1 year, from last September to now, I had a 74% gain, almost 75% gain, almost double my money. Now, I think most people would agree, hey, that's good. But along the way, you had to stomach a massive, almost break-even kind of a hit here. And of course, after that, you felt like a genius, of course. Now, and then right now, you're sitting, at one point, you were more than double your portfolio, right? You can see that this is above 100%, and now you gave back a ton of it, right? So you're just going to move up and down a lot. You got to decide, do you want to do that? For most people who are used to like index funds or mutual funds or mutual funds or whatever, that are used to that kind of volatility, this is probably not the kind of, even with the algorithmic portfolio, this is probably not the best fit for you. And also, you also need $16,000 in order to, as a minimum investment, in order to even purchase this. So if you don't have $16,000 to invest, and you should only invest what you can afford to not have available to you immediately, right? You should only invest what you can afford to basically lose and just not look at for a long time, right? Then if you don't have a spare 16,000 bucks, then this isn't for you. I just wanted to show you what this can become. So in this example, it held pretty much, it basically allowed you to get back to a break-even point and crash no further than March 4th or March 5th. Okay, that's when it decided to sell everything and go flat. Okay, now if we look at the NASDAQ, I'm going to pull this up on the other chart here. If we pull up the NASDAQ and I bring this window over, you can see it even after March 4th, when the algorithm exited, there was a lot more crashing to be done. You can see that March 4th wasn't the end of the NASDAQ. And I'm just approximating these FANG stocks up with the NASDAQ because they pretty much are the same. They pretty much move the same way. You'll see that it didn't confirm. It didn't actually get back in the market until May. Okay. Now you'll argue, well, shouldn't it have tried to get back in March? Well, that's the thing with the Nasdaq. It's so sensitive. It would wait until a confirmed uptrend before it gets back in again. Okay, so the algorithm used for these FANG stocks is different than the algorithm used for the SPY. That's the main point that you need to take away from this, is that not all algorithms are built the same. Okay? So that's one portfolio. Believe me, this is probably as much of a gambler's mentality that you can get. Okay, so let's go back. Now this is the other. This is another SMARTFOLIO that is something that I probably wouldn't ever put money in this, and I'll show you why in just a second. Okay, now this, in my opinion, obviously I didn't create this app, and you'd have to ask, you know, the brains behind the operation. You'd have to ask the hedge fund manager who created this, who I'm friends with. I've done interviews with him. You can look back and catch other interviews that I've done with Kelly Korshak, the creator of all of these SMARTFOLIOs and algorithms. But if you ask me, I think this is, and I'm kind of reading Kelly's mind a little bit here, but this is more of Kelly demonstrating his bread and butter baseline algorithm and sharing it with you, so as to be as transparent as possible without having to get into the nitty-gritty details of all the math. Because what this does is the S&P, this just shows you a tactical method to navigate the ups and downs of the market, namely the S&P 500. And it goes on to explain with some technical terms why this is safer than just holding the S&P 500. Now, if we look at this, you can see that if I bring up, I'll compare this to the SPY stock. Okay, it's just the easiest way to compare. Okay, this is a rolling 12 months. And this is also a rolling 12 months. Same time frame. You can see that the iFlip tactical model right here, tactical method, okay, it did suffer a little bit of the crash, but it recovered and beat it right away. Why is that? It's because it decided to sell across these, it exited, so it didn't participate in the crash fully. You can see how it goes flat for a little bit because it exited some of the positions. Now, if I pull this up, the S&P 500, which is what most people do, is just buy the S&P 500 or something that tracks the S&P 500 pretty closely, and just buy and hold, wait and pray. That's what most people do, which means you're going to take the full damage of the S&P 500 crash. And if you did that, even with the recovery, you're just barely barely at break even. So this is why it's safer. This is designed to dodge the crashes. Now, if you want to just take the S&P 500 purely at face value and take it out for a test drive, then sure, go right ahead, put money in this SMARTFOLIO, and you can manage your risk that way. But this is just so that you can have, in my opinion, this is just so that you can have an apples to apples comparison like what I just showed you with the S&P 500. This isn't something I personally am not going to put money in here. You can if you want, totally, right? You would have beat the market already just by this alone. But I want more than that. So I'm going to go back. I'm going to click Start Trading. I'm going to take a look at, we took a look at the FANG. We took a look at the S&P 500. I am now going to click the 60/40. Now this is save the best for last kind of thing. All right. Let's look at the same time frame, 1 year. Okay. Now, at first, let's look at the description. 60/40 consists of 60% allocation to the S&P 500 and 40% allocation to income-generating dividend stocks. It sounds pretty good. It sounds pretty diversified. A 60/40 portfolio is a classic Markowitz modern portfolio theory portfolio and represents the most commonly offered product by financial advisors. Okay? This is the most apples to apples comparison to what your financial advisor is going to offer you. The difference is it's going to use AI to hold more aggressive instruments on both the yield side to tweak the income portion of the portfolio and let the AI handle the correlation of the risk of the portfolio as a whole. Okay, so it starts getting way into the weeds of like using some detailed like hedge fund language. Simply put, what it means is that it's going to manage these 5 equities: the spider, and I don't know what this is off the top of my head. I believe this is the AT&T. Oh, this is a treasury bond. Of course. I trade this in futures. It's going to take the TLT, which is the a treasury bond, 20-year treasury bond. And it's going to also look at, this is Exxon right here. ExxonMobil. It's going to look at AT&T. Okay. And it's also going to look at, what is this? An AT&T. Honestly, I don't know what TVB is. Let's take a look. This is another version of AT&T. It's a note. So, honestly, I don't know. I'm going to be totally honest with you. I don't know exactly what TVB is. It's not something that I trade. But doesn't matter. I don't need to know. The AI is going to take care of it for me. So I'm going to go back. And the AI is invested in these 5 equities, right? The spider, the S&P 500, and it's going to put 60% of my money. So the majority of my money is going to go into the S&P, but it's going to split up 40% of my money into Exxon, AT&T, and the treasury bonds. Okay, and this is designed to give me a dividend type of income. Okay, I don't have that yet in my iFlip portfolio, so I want to add it. So what am I going to do? It says minimum investment $650. That's great, because what I have is I am going to invest. So if you're going to do this yourself, you can, what you would do is on the web app, you would come up here, and on the mobile app, I think it looks a little bit different, but I am going to put in an even $1,000. Oops. Okay. And I deposited $1,000 last week or so to get ready to do something like this for you guys live, so that I could actually do this. So I already have over $1,000 worth of buying power, so this will go through right away. And today is Friday, so on Monday there should purchase all of these stocks right away. Okay, so I am going to click review order, confirm purchase, and boom, I am now boom. Yep, I am now invested in the 60/40 SMARTFolio. So if I go back now, click start trading again, it actually doesn't show the orange dot yet because the market is closed right now. It's Friday night. But if I go to activity, see, this transaction appears. Okay. Now, I submitted this on September 11th, 7:19 p.m. That's right now. And on the open of the next trading day, which will be Monday, it's going to purchase $1,000 worth, up to $1,000 worth of the 60/40 Smartfolio, if it's a smart time to buy. That's the key component. Remember how I put in $1,000 into the SPY Plus in January, but it didn't determine, the algorithm didn't determine it was a smart time to buy. It determined that in the middle of at the end of February or something, and it made a tiny little profit for a few days, exited March 4th, and then it decided I'm gonna the smart time to buy was March 19th, which was almost at the bottom of the market. So it did timing in an excellent way. Okay, now let me see here. Oops, that's not what you want to see. Oh, I wanted to click start trading. Okay, so if you want to do the same for yourself, then go right ahead. I'll click the link below in the description and download this app for free, and you can start investing just like this, and you can start algorithmically managing your money and protect yourself from any further crashes almost perfectly, right? It's not exactly perfect, and nothing is, but this did it pretty damn good. You can invest up to $6,000 for free, but if you want more advanced dividend income, or you want the S&P 500, or let's say you do have $16,000 to spare and you want to really go aggressive with the FANG stocks while still managing your risk with AI, then go right ahead, start paying $10 a month. It's not that bad if you have $16,000 or over $6,000 even. It's really not that bad at all. And you can start investing in some of these more advanced portfolios. I'm going to do another video on these, on the actual advanced portfolio, the advanced tier and the pro tier, but I'm not going to do that today. I'm going to do that as we scale into things. And this is, I believe we covered enough content for one video anyway. So that's it for today's video. I just want to point out one last thing, which is, what was I going to say? Also, if you want to just trade manually, you don't want to trade with an algorithm, you want to buy and sell stocks on your own, you can totally do that. I've been doing that as well. If you just go to the manual section, you can see that I've bought a bunch of different stocks over the past few months, just cuz. These are not the stocks, these are the where are my stocks? The stocks that I have are the ones I guess I have to go all the way to the back to the home screen. Nope. Oh, I'm looking at it, it's staring me right in the face. It's these stocks in white. Okay, the stocks that are labeled in, or the Smartfolios are labeled in blue, and the stocks that I bought are labeled in white. So these are the stocks that I bought manually. You can totally do that as well. Okay, so that's it for today's video. Hope you got something out of it. If you want to start doing this for yourself, and if you want to start investing like a professional and time the market like a professional, then you don't have to learn how to do it. This app can do it for you. So click the link below and get started and start trading like a professional today. Thanks for watching, everybody. Have a great weekend and stay tuned for the next video from YouTube.